Hey there, Lincoln here from bullacademy.org. Today let's do a portfolio review for one of the patrons of the channel, Taiwo. Taiwo has been a patron for a few months now, since January of 2021, and he's a premium patron, so I appreciate all of his support along with everyone else supporting the channel. There are about 90 some of us right now, so thank you to all of our patrons, and I look forward to getting into more of your portfolios and doing more portfolio reviews for all of you. And for everyone else who's watching these videos, I hope that they will help you discover new companies that you might be interested in and that makes sense for your portfolio too. So I hope you enjoyed the video. But before we get to it, I want to ask you a quick favor, because in order for me to keep doing these videos, I need you to let me know that you like them, or else I can't do it because YouTube won't let me. So if you enjoy it, don't forget to like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts on the portfolio and whether or not you're interested in any of these companies. And of course, if you want to become a patron of the channel, support the channel, get more access to me, get direct answers to your investing questions, then join us over at patreon.bullacademy.org. You'll be able to engage on our Discord channel where we share knowledge and discuss the stock market every day and share news, rumors, and collaborate on new investment ideas so that we can all do our research and then come back and make better decisions together. So if you're interested in all of that, I hope to see you over at patreon.bullacademy.org. Now let's hop in. When Taiwo initially requested this portfolio review, he had only been investing for a few months, and he started out with $11,000. And back when he submitted this video request to me, he had grown that portfolio to over $20,000. That's growth of 81%, almost double his money in just a few months. It's very good. The top stocks in Taiwo's growth portfolio are Palantir, IPOE SoFi, and Tattooed Chef Inc, TTCF, a channel favorite. Later in the video, I'll share some more of his stocks, but we're going to focus on the top three. And you're not going to want to miss them because this portfolio is extremely high growth. He grew it to over $50,000 back in the market highs of February 2021. And that's an increase of 355% over when he started with $11,000. So very high growth. It's amazing how he's been able to more than 4x his money in the stock market by just buying and holding. So I am very impressed by this portfolio, but keep in mind that back in mid-February, most of the market was very high, especially growth stocks. That was a time when CCIV, Lucid Motors, was rising all the way to about $60 per share. And that was the same time that SPACs were doing very well, recovering from their recent lows. IPOE, which announced its merger with SoFi back in January, reached its peak of $26 per share on February 1st of 2021. In the second week of February, Palantir was retesting its high of $39 per share from the end of January. Around that time, the stock was up 300% since its direct listing day a few months prior. And Tattooed Chef was trading steadily around $24 per share, which was down a little bit from its recent high of $27 per share, but it was still up 8% on the year. So with all that background on recent activities around these companies, I want to walk through each of these companies in this video and share with you their summary, what they do, how they make money, how much they've made in the past, and how much they plan to make in the future, as well as their notable competitors. And of course, we'll get into some projections on their future market capitalizations, the valuations that the market will give them in the future, so that you can see for yourself whether or not they make sense for your portfolio if you're interested in how they do business and their growth potential. From there, once we cover each of these companies, I'll be back to share with you my own thoughts on each company and whether or not I would invest in them in my growth portfolio. So stick around and I hope you enjoy this next part. But before we get to it, if you enjoyed the video, don't forget to like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts on each company because I need your engagement to keep this channel growing and to keep giving me reason to come back out here and share with you all my research and thoughts on all of these companies on the stock market. Now let's hop into our first stock. IPOE SoFi. SoFi, founded in 2011, is a one-stop shop for young high earners to earn, invest, save, and borrow money to build their wealth and manage their finances in a single place. IPOE, the SPAC, the Special Purpose Acquisition Company by Chamath Palihapitiya's Social Capital, is taking the fintech company public. SoFi also acquired a financial tech fintech infrastructure company called Galileo in 2020. Which is used by companies like Robinhood, Chime, Dave, MoneyLion, and many of the largest fintech companies. Galileo is the AWS, Amazon Web Services, of fintech. They provide the infrastructure that allow these companies to operate. As of March 2021, SoFi is also acquiring a bank to speed up its bank charter application. It's going to become an actual bank to cut out the middleman between itself and its lending and banking customers. SoFi has also expanded internationally by acquiring Hong Kong's 8 Securities Limited, an investment app, in 2020. Most recently, the company is venturing into car loan refinancing via a partnership with Model Refi. And if all of that's not enough, SoFi also owns the naming rights to the SoFi Stadium, which is the Inglewood, California stadium that hosts the Los Angeles Rams and will also host the 2022 Super Bowl, the FIFA World Cup, and Summer Olympics, and other major sporting events. Revenues. In 2020, SoFi's revenue was said to be at $621 million. In 2021, the company expects to bring in $980 million in revenues, which would be a 57.8% increase over 2020. In 2025, SoFi anticipates revenues of $3.67 billion. They expect to have compounded annual growth of 43% in their revenues over the next 5 years. This is a very high growth company at the start of its journey. Profitability. SoFi expects to hit profitability in 2021 by delivering $27 million to their bottom line. In 2025, net income is predicted to rise to $1.17 billion. Competitors. SoFi's main competitors are in the lending space. There are Lending Club, Earnest, Upstart, and Ally, to name a few. Upstart, which recently went public at the end of 2020, had revenues of about $233 million. As of 2020, Upstart was growing its revenues by about 40% year over year, which is very good. Upstart is currently valued at about $7.88 billion, which is about 34 times its 2020 revenues. Valuation. In May of 2020, SoFi was valued at $5.7 billion. The IPOE SPAC deal, which was announced in January of 2021, values the company at $8.65 billion. That's an 8.8x multiple on their expected 2021 revenues. Today, with an expected 865.1 million pro forma shares outstanding once the SPAC merger is complete, the market is valuing SoFi at about $14.12 billion, given a share price of $16.32 for IPOE stock as of April 16, 2021. That's a 14.4x multiple on their expected 2021 revenues. Valuation projections. If SoFi is granted a sales to price multiple of a mere 15x, its stock could rise to just $14.7 billion to end 2021 and $55 billion in 2025. If the stock achieves a price to sales multiple of 21x, it could be valued at $20.5 billion at the end of 2021 and $77 billion for 2025. However, if the market gives SoFi a forward sales to price multiple of 34x to match Upstart, one of its public fast growth competitors, which SoFi is far larger than and is growing faster than, the company's market cap could rise to $33.3 billion to end 2021. Fast forward to 2025, with the same multiple, the stock could be valued at about $124 billion if it achieves or approaches the projected compounded annual growth rate of 43%. So we're looking at anything between $15 billion and $124 billion for a market valuation of SoFi between now and the end of 2025, if these multiples are granted by the market. For further comparisons, Square, a leading fintech company, did $9.5 billion in revenues in 2020 and is currently valued at $116 billion. Palantir was co-founded by Peter Thiel in 2003 with the goal of supporting Western governments, especially the USA and its allies, in the artificial intelligence race against their adversaries, such as China and Russia. The company leverages machine learning and data analysis algorithms to detect unusual and suspicious patterns in large data sets in order to help governments and private organizations identify, predict, and report conclusions and outcomes. Revenues. In 2019, Palantir's revenue was $743 million, which was a 50% increase over the $595 million they achieved in 2018. In 2020, the company's revenues grew by 47% to $1.1 billion. And for the future, the company is projecting revenue growth of at least 30% for 2021. That would bring them to at least $1.42 billion in revenues this year. Profitability. Palantir has never reported a profit. The company's true contribution margins for their offerings was only 6.7% for 2019, according to their S1 filing. It's unclear if the company will ever be able to make a profit given the nature of their sales process. Competitors. There is Booz Allen and SAP. Booz Allen, BAH, is a consultant firm with expertise in analytics, digital, engineering, and cyber. And in the company's own words, we help businesses, governments, and military organizations transform. SAP is one of the world's leading producers of software for the management of business processes, developing solutions that enable effective data processing and information flow across organizations. Booz Allen brought in revenues of $7.5 billion in 2020, which was 11.3% over 2019, and the company has a market cap of $11.5 billion. That's a sales to price multiple of 1.5x. SAP made $31 billion in 2020, which was only 1.2% over 2019, and they have a market valuation of about $164 billion. That's a sales to price multiple of 5.3x. Both of these companies reported better contribution margins than Palantir in 2019, with SAP reporting 5.7 times more than Palantir. Valuation. On its direct listing day, Palantir was valued at $21 billion in 2020. After trading as high as $45 per share on January 27, 2021, the market capitalization of Palantir peaked at $69.9 billion. Today, April 18, 2021, the stock is valued at $41 billion. Valuation projections. With a 10x multiple on projected 2021 revenues of $1.42 billion, we get to $14.2 billion market cap for 2021. With a 21x multiple, we could expect Palantir's market cap to end 2021 at $29.82 billion. With a 41x multiple, the company's market capitalization could rise as high as $58.2 billion by the end of 2021, if it holds its current sales to price multiple. Tattooed Chef Inc. Tattooed Chef is a leading plant-based foods company, offering a wide array of innovative plant-based food products that taste great and are sustainably sourced. Their foods are mainly frozen for those who want to eat healthy but don't want to cook their own meals. Revenues. In 2020, Tattooed Chef's revenues increased by $63.6 million, or 75%, to $148.5 million, which was just above projections provided by the company when they announced their merger with Foreign Merger 2 in the middle of 2020. In 2021, the company expects to bring in $222 million in revenues. The team also expects the percentage of their revenues coming from their branded products to grow from 52% to 63% this year. Profitability. Tattooed Chef is a profitable business. For Q4 of 2020, Tattooed Chef reported net sales of 3 cents per share. For the whole year of 2020, adjusted EBITDA was $9.6 million, or 6% of revenues. This was compared to $6.9 million in 2019, or 8% of revenues. Competitors. The company provides Beyond Meat and Vital Farms, among others, as the comparable companies. Valuation. With 57.7 million pro forma shares outstanding for the FMCI merger and a share price of $10 per share, the company was valued at $577 million in 2020, before the closing of the merger. Today, with a share price of around $17 per share, the company has a market cap of $1.37 billion. All time, the stock is up about 73%. The stock currently has a price to 2021 expected sales multiple of 6.2x. As of 2020, Beyond Meat was trading at 12.2x their 2021 projected revenues, while Vital Farms traded at 6x. Valuation projections. Depending on the price to sales multiple the market decides to give Tattooed Chef, we can come up with a reasonable range for where its market cap could land at the end of 2021. With a 6x multiple on $222 million in expected sales, TTCF would have a market cap of just $1.33 billion, which would be down about 3% from its current valuation. With a 10x multiple, the stock would be valued at $2.22 billion, which is a 62% upside from its current market cap. With a 12x multiple to match Beyond Meat, the stock would be valued at $2.66 billion, which would be a 94% increase. To support these multiples, Tattooed Chef has projected that its net sales compounded annual growth rate of 61.7% between 2019 and 2021 will be greater than Beyond Meat's 58.6% and Vital Farms' 31%. Furthermore, its expected 2021 adjusted EBITDA margins of 13.9% will be considerably greater than Beyond Meat's 11% and Vital Farms' 5%. Now that you know how all of those companies work and how much money they make and how much they plan to make in the future, I want to share with you my thoughts on Taiwo's portfolio. I like all of the 3 companies that top his portfolio. That's Palantir, IPOE SoFi, and TTCF Tattooed Chef Inc. I am a big fan, especially of IPOE SoFi and Tattooed Chef Inc. As you will know if you've seen my videos in the past. And I just recently, just about a week or 2 ago, covered a whole documentary of Palantir explaining how that company works, why they exist, how much money they make, who their customers are, who their competitors are. And I would love for you to go watch it because it's very insightful into the company. Before I put that together, I had no idea how the company actually worked because it's a very mysterious company. But after looking into that company and doing a research for that video, I became pretty interested in investing in it. Of course, I haven't pulled the trigger because I'm not sure if that's the kind of company I want in my portfolio, just morally, but I am still thinking about it. I like Palantir's numbers. I like the growth potential, but I don't like all of the use cases of the product. So I'm not investing right now. Nonetheless, I think it makes a good investment because they have very loyal customers, or at least they have very high switching costs because their customers can't easily leave them because of how integrated they are in their customers' business. They call themselves the operating systems by which these companies and organizations make their decisions. So of course, they're very entrenched in their company's operations. So it's very hard for their customers to just up and leave them, which is great for investors because that means that their revenues are going to be pretty consistent in the future. Of course, they're on contracts with their customers and those contracts can run out and not be renewed. But again, the switching costs are so high that their customers just might say, hey, we're already here, let's just keep going and just keep renewing their contracts. But of course, you have to keep in mind the risk of them not doing that, the risk of them saying, hey, we know it's going to be hard to switch out, but we found this better offering, this better solution out there. We're going to go try that out and forget Palantir. So that's the risk that investors have to keep in mind. And the last thing on Palantir is that the valuation might be a bit too overpriced right now, but time will tell. Regardless, I think they're going to be increasingly valuable in the future, and I think it just might be a 10x opportunity given the hostility among governments that continues to grow, right? Russia and China continue to grow hostile towards America and their allies. So America will continue to need these services, and so will their allies in the Western governments. And those are the exact organizations and governments that Palantir promises to help. So if you like this space, Palantir might be the right investment for you. Of course, check out their competitors, Booz Allen and SAP, but Palantir might be the best one given their high growth. So next is IPOE SoFi. I am extremely bullish on IPOE SoFi. SoFi is my biggest investment. I just recently got it to 4,000 shares because that's how bullish I am on this company's future. And there's very good reason for that. So I'm very glad to see this in Taiwo's portfolio, especially near the top of his too. The ongoing understatement here is that it's going to be very hard for the market to value SoFi properly because they service both consumers and businesses, right? They have a one-stop shop for customers, for their clients, for saving, for spending, for investing, for loans, and for so many other things, investing in IPOs now, right? And then they also have Galileo, which most people still seem to not understand the potential value of. Galileo is like Amazon's web services for fintech companies. Galileo is the infrastructure for other fintech companies like Robinhood, Chime, Dave, MoneyLion, and so many others that depend on SoFi's Galileo to continue to operate their businesses and grow. So when they grow, so does Galileo, which means so does SoFi. Sure, there are other competitors in the space that do things that SoFi does. Yes, that's always true, and we actually want that. It's great to have competition. But SoFi is special in that they are the only ones who centralize vertically integrated services for their customers. Like we said before, they have all of these services just in one app. You can save your money using SoFi. You get a debit card to spend money. You need a credit card? We got that too. You need a mortgage? We got that too. You need a personal loan? We got that too. You need a student loan? We got that too. You want to invest in IPOs, which has never been possible before for retail investors? We got that too now. Oh, and we also own the Los Angeles Rams Stadium. We own the naming rights to that. So it's called SoFi Stadium. And we're going to host the 2028 Olympics. We're going to host WrestleMania. We're going to host NCAA tournaments and so many other sporting events and become a household name. That's the beauty of SoFi. They understand how to build a company that customers love and that serves all of their customers' needs. And of course, they know how to grow using free marketing. They put their names on stuff, but then they also say, hey, we have all these things in our app. We know all the information on your financial situation. We know how much you're saving. We know how much you're spending. We know if your credit is good. So here's a credit card for you. You want to buy a house? We see that you have lots of money saved there. Maybe it's time to invest in real estate and start building generational wealth. Here is a mortgage, right? So all of that cuts down their cost of marketing because they can just upsell their customers. Like I just explained, they see all of the data and they just say, hey, here is something that you probably want and should have. You should be investing in real estate. You might need a car, and now we offer car loan refinancing so that you can get better rates. And if you're just starting out building credit, we're going to help you do that. If you continue to pay off your credit card every month for 12 months, we'll cut your rates down. And all of that not only convinces people to continue to use SoFi, but to become ambassadors of the company. Like myself, I love the company. I've been using this since 2019. So that's why I am so bullish on this company, because I understand it so intimately. Then there's Tattooed Chef Inc., which you probably know by now. I'm bullish on. Love this company. They're a frozen plant-based foods company. They're the leader in this space, and they've been doing very well. They're profitable. Their growth rate is unmatched. Oh, and did I say they are vertically integrated? There's a theme here. I love vertical integration. Tattooed Chef, unlike their competitors, unlike the industry that they operate in, has found a way to vertically integrate their production and their supply chain. So they don't have to wait on suppliers when it comes to innovating on new products. When they come up with new ideas, when the tattoo chef herself, Sarah Gillette, comes up with new ideas, her team has all the resources they need to make that come to fruition. And that is a huge advantage over the competition. So when people ask me, hey, Lincoln, what's the competitive advantage of Tattooed Chef? What makes them so special? Vertical integration is what makes them so special. That's why they're so profitable already. That's why they're high growth. That's why they're growing their brand name, Tattooed Chef, so fast, faster than they actually predicted during the FMCI days. So I am extremely bullish on this company. I like it. I am happy that Taiwo also is bullish on Tattooed Chef, and I'm going to continue to invest in it. So we'll see how it goes. But this one, Tattooed Chef, I think is going to be a slow growth in the stock. People are going to be slow to realize just how great this company is, but one day they will find out. That's just my thoughts. I'm not a financial advisor, so it's up to you to make up your own mind, but that's just how I think about this company. Now let's just take a quick look at some other companies in Taiwo's growth portfolio. Alongside Palantir, IPOE SoFi, and Tattooed Chef Inc., Taiwo also has Planet 13 Holdings, Marathon Digital Holdings, and NIO. Of course, NIO, the competitor to Tesla. Planet 13 is a vertically integrated leader in delivery of retail concepts and cultivation in the rapidly growing Nevada cannabis market. And then there's Marathon. Marathon Digital Holdings Inc. is a digital asset technology company which mines cryptocurrencies with a focus on the blockchain ecosystem and the generation of digital assets. And then, of course, there's NIO. NIO designs and develops smart, high-performance electric vehicles. So, in other words, they are an EV company that is competing with Tesla from China. I am betting on CCIV, so NIO is not for me. My bets on EV car makers is CCIV, Lucid Motors in the consumer space. And of course, I like Arrival, which is in the B2B space, the business-to-business space, with fleets like UPS signing up for their vehicles. So I really like that company. That's where I will put my money. So CCIV, Lucid Motors, Arrival, and if you want to go with Tesla, even though they're way up there beyond what I think is reasonable for their valuation, you can go with them too. But hey, if you want to take the risk with Chinese companies and invest in NEO, that's fine with me too. I mean, doesn't matter what I think, but I am not a big fan of Chinese companies because there's so much hostility in the political space around these companies like Alibaba. And of course, the Chinese Communist Party, they pretty much own all of the business over there. If they don't like you, they just make you disappear. And we've seen that with Jack Ma. As wealthy as he was and still is, they could just say, hey, Jack Ma, we think you're getting too powerful. We don't care how great your businesses are. We need to handle you. And I don't know what's happening with Jack Ma right now, but it's not great. It's not what I want for my companies. I want to see my company's leaders intact and living free. So yeah, I'm not a big fan of Chinese companies. With all of that said, I think that Taiwo has the right kind of diversification in his portfolio. And that's by sector, not by just pouring in a whole bunch of companies so that he can be diversified, like they say, with 30, 100 companies in his portfolio getting mediocre results. I like the concentration that he has with his portfolio, and it's obviously is showing because of how quickly he's been able to grow his portfolio. Even if there's some pullback, right? There's always gonna be pullbacks, but if you invest in companies that you know, understand, believe in, and plan over the long term, then you'll be just fine. That's what we practice here. That's called the bull mentality, right? The bull mentality is that we know what we invest in, we understand what we invest in, we believe in what we invest in, and we hold for the long term because that's how we build wealth in this country. That's how we give ourselves the best chance of success on the stock market. So we preach that here and we practice it. And it's not just a saying that I made up, right? It's a way to ensure that you're going to be in this for the long term and not for the short term, because people who don't practice the bull mentality, they get burnt and they flare out. They leave the market. They call it a scam because they try to get rich super quick and they bought at the top of the market all of the hype and the FOMO. And then they got burned on the way back down because day trading, swing trading is not as easy as everyone tries to make you think, right? Everyone wants to tell you, hey, you can 100x your money just by practicing these 10 steps and doing what I did. No, that's not how it works. So I always say to people, hey, just buy and hold. Just buy and hold. Just buy and hold. That's what Warren Buffett, that's what Charlie Munger, that's what Mark Cuban, that's what all the greatest investors that we've known in our time and in history, Peter Lynch himself, say. Just buy and hold. So Taiwo, I like your portfolio and I like most of your companies, but of course I made my thoughts on NEO. That's the one that I just would not touch, even though it's super fast, it's high growth. It's just not for me. But hey, it's your portfolio and I'm wishing you the best. Thank you for all your support of the channel of bullacademy.org and for helping us keep this channel going, for helping us get to where we are today. We're at 7,000 subscribers now, and we couldn't have done it without you and the rest of our patrons at patreon.bullacademy.org. So if you're watching out there and you want to support the channel, help us continue to grow, and of course request your portfolio review, then join us over at patreon.bullacademy.org. You'll get more access to me, you'll get direct answers to your investing questions, and you'll be able to engage on our Discord channel where we share knowledge and discuss the stock market every day so we can all collaborate, find new deals, rumors, news, and do our own research and then come back and share our perspectives so that we can all make better investment decisions together. That's how we got in early on SBE ChargePoint, on IPOE, on CCIV at $12 per share before it ran up 6x in 6 weeks. And there's so many more. Many of my top investments have come as recommendations from patrons. So I am forever grateful to our patrons, and I hope that you will become a patron too. So if you're interested in all of that, I hope to see you over at patreon.bullacademy.org. If you enjoyed the video, don't forget to like, subscribe, hit the notification bell, and comment your thoughts on Taiwo's portfolio and whether or not you would invest in any of these companies. I'm Lincoln with bullacademy.org. Thank you again and have a great day.